only on Bloomberg Quint.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup, which does not look the best at this point of time. The SGX Nifty has started reacting to the Iran deal that has happened. So clearly, it's down almost 36 points at this point of time, but still almost 1.5 hours to go for the markets to open. So this could change, but overall, the Qs don't look the most positive. Most of the ADRs ended with a negative bias, with the exception of ICICI Bank, which was up. So HDFC Bank was down over 2%. Wipro, Tata Motors and Vedanta were down also over 1% in trade. The exception being Doc Tradies, which was flat in trade, and ICICI Bank, which moved up almost 2% on the back of numbers that it reported. Crude is surging in trade. It's up over 2% in trade currently because of the deal of the Iran deal. It's up almost 2%. So Brent is close to the $77 barrel per mark, and WTI inching close to the $71 barrel per mark. But remember, yesterday in trade overnight they were down over 2%, so they seem to be recovering most of the losses. LME was shut the day before, but yesterday it reacted negatively to the metal side. So copper was down almost 1%. Nickel, lead, tin, all of them were down over 1%. Even China steel is down over 1%. Aluminum is down almost 0.5% in trade. Most of the precious metals are also trading with a negative bias. Now FIs have been net sellers in the market. It's the DIs that have been accumulating in the market. They bought in close to 923 crores in the cash market. So on a month-to-date basis, whatever FIs have sold, DIs have been buyers in the market. Now individually, some of the sectors in focus, the Nifty was flat in trade, but the small cap did manage to rally significantly in trade. Which were the sectors that did well? You had the auto, which was down almost 0.5%. The Nifty Media Index was down 0.5%, but the banking space did well on the back of ICICI Bank. So Nifty Banking Index was up almost 0.9%. The PSU Banking Index did well, it was up 1%. And the real estate index did well in trade. That was up almost 1.1%. 14 is the Wix level. It did manage to move up in trade yesterday. Now Nifty only contributor was ICICI Bank. Some of the banks like SBI and Axis contributed, but it was mainly on account of ICICI Bank that the Nifty managed to end with the green. Otherwise, we would have seen losses on the Nifty itself. But Agam, what are you spotting on the FNO side?
Well, Darshan, consolidation continues for the Nifty at around 10,700. We really haven't seen too much change in the Nifty futures. The Nifty Bank futures, on the other hand, have seen another 14-15% addition towards open interest, largely led by banks such as ICICI, Axis and SBI. But moving in, when it comes to the Wix, that's moved up around 2 points and percentage points, and this is largely on expected lines as we move into the Karnataka elections, a big event which also usually spurs the Wix upwards. In terms of options, we are looking at more writing in the 10,500 put, more base formation, something that we've seen through the course of this series. Not too much to speak for when it comes to some of these options and unwinding coming along. But stocks which are in focus in today's day of trade, Diwan Housing Finance moves into the ban, expected restricted trade there. On the other hand, Jio and Financial moving up. We've seen longs building up there, and longs for SRF as well. In fact, a substantial increase in open interest of as much as nearly 13%. On the losing end, PC Jeweler once again stands out in trade, about near 15% added towards excuse me, open interest towards shorts, even as the stock tumbles by as much as 16%. But that's as far as the equity market is concerned. Let's head across now to Jayesh Khilnani to give us an idea about how commodities are shaping up, given the fact that we've had, Donald Trump withdrawing the Iran nuclear accord. Jayesh.
Agam, oil prices are absolutely all over the place. If you have a look at the overnight Qs, WTI declined as much as 4.4%, and currently if you look at the oil price, that is trading more than 2% higher for both WTI and Brent. WTI has in fact surged above the $70 per barrel mark, and we have Brent as well, which is now trading very close to the 77 mark as well. Now we understand that the US will actually withdraw from the 2015 Iran deal. What this means is that they are actually going to curb the Iran nuclear program that they had initiated, and in fact reinstate all the financial institutions on Tehran. Now we also understand that they have given their allies about 180 days to remove themselves from any of the Iranian deals that they would have got into, and also that the US will actually keep a close watch on the amount of Iranian oil that is purchased during that period. And based on this, the analyst community is now saying that post the US withdrawing from the 2015 Iran deal, oil prices are likely to head upwards towards the $80 per barrel mark. Now, as far as gold prices are concerned, we didn't get any major reactions over there. That remained little changed, though the dollar index is now trading positive for the fourth consecutive session. As far as the base metals are concerned, the index itself, after resuming trade, declined about 0.7%. We had aluminium and zinc, which managed to close positive, and we had copper, nickel, lead, and tin that declined more than 1% each. But while oil will be actually in focus, there's plenty of news that's making headlines globally, from comments from the Fed Chair Jerome Powell to Australia's budget surplus. Here's some of the top headlines from across the globe with Bloomberg's Tom McKenzie.
Fed Chair Jay Powell, as you said, says financial markets have got the message on gradual interest rate increases and shouldn't be surprised by its actions. He told an IMF conference in Zurich that tightening has proceeded without disruption to financial markets, but he warned some investors may still not be well positioned for rate hikes.
I do not dismiss the prospective risks emanating from global policy normalization. Some investors and institutions may not be well positioned for a rise in interest rates, even one that markets broadly anticipate. And of course, future economic conditions may surprise us, as they often do.
China and the US have clashed at the WTO. Washington's envoy says Beijing's claims to be a defender of free trade have, quote, entered the realm of Alice in Wonderland, where white is black and up is down. China also lashed out against President Trump's threats to slap tariffs on $150 billion of Chinese imports. A WTO spokesman says the Geneva meeting was extraordinary in its intensity. President Trump has spoken by phone with his Chinese counterpart after Xi Jinping's 2 days of talks with North Korea's Kim Jong-un. The unannounced meeting was the second between the Asian leaders in less than 2 months. Kim made a surprise 2-day visit to Beijing in late March. The meetings with Xi in quick succession suggest ties are rapidly improving as North Korea seeks talks over its nuclear program. And Australia's forecast a budget surplus of $1.6 billion in fiscal 2020, although economists say that relies on optimistic wage growth. Treasurer Scott Morrison's budget for the coming year offers tax cuts for low and middle income earners, financial perks for retirees, and modest giveaways for health and science. But the average worker's pay packet grows by just 10 Aussie dollars a week. Global News 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Tom McKenzie. This is Bloomberg.
It is clear to me that we cannot prevent an Iranian nuclear bomb under the decaying and rotten structure of the current agreement. The Iran deal is defective at its core. If we do nothing, we know exactly what will happen. In just a short period of time, the world's leading state sponsor of terror will be on the cusp of acquiring the world's most dangerous weapons. Therefore, I am announcing today that the United States will withdraw from the Iran nuclear deal. In a few moments, I will sign a presidential memorandum to begin reinstating U.S. nuclear sanctions on the Iranian regime. We will be instituting the highest level of economic sanction. Any nation that helps Iran in its quest for nuclear weapons could also be strongly sanctioned by the United States. America will not be held hostage to nuclear blackmail.
Well, he criticized it, as he long has, as a one-sided deal, the benefits accruing primarily to Iran. But he did make several points that he said that were his reasons for jettisoning the deal. Number one, he said that it was, quote unquote, defective at its core because it didn't address Iranian ballistic missile development, nor its influence on many of the conflicts that are arising in the Middle East, and such as in Syria and in Yemen. And he also argued that it would allow, because some of the terms of it expire within a decade, it would allow Iran to continue its pursuit of a nuclear weapon, and that would trigger an arms race in the Middle East as other countries sort of prepare for that that eventuality. That said, he said that he hoped that these punishing sanctions that are being reinstated in 90 days would force Iran to come back to negotiations and perhaps get a better deal, at least from the U.S. standpoint, to address those issues.
Right, and we heard from the Iran president, Rouhani, also. He's saying that they can achieve the benefits of JCPOA with just the 5 without the U.S. Is this deal still relevant without the U.S.? What's the response so far among Congress and the Republican Party?
Well, in Congress, the reaction split, as you might expect, largely along party lines. Democrats universally decried Trump's action as dangerous, impulsive, and the wrong strategy for the U.S. Republicans, for the most part, but not all, backed the president. They'd long been critical of the deal when it was negotiated under President Obama, and so they were universally applauding the president. There are a few notable exceptions. But the thing is that Congress, as it was when the agreement was first negotiated, is on the sidelines in this. They have, even if there were some sentiment to reverse the course, there was not much that they could do to do so.
Back to Indian equity markets, talk of the day is Automotive Axles on back of good set of numbers posted by the company. Top line growth has shown a good 31% growth at number of around 469 crore for the quarter ended March as compared to nearly 360 crore that we've seen in the corresponding quarter. Net profit, it has been a good percent jump there, almost a 56% rise at a number of 28 crore as compared to nearly 18 crore that we've seen in the corresponding quarter of the previous year. It's a good show coming in from the company on the operation front. If you look at the EBITDA performance, we're looking at an uptick of nearly 48% at a number of around 55 odd crore as compared to nearly 37 crore that you've seen in the corresponding quarter. Margins, however, have been flattish at around 11% as compared to nearly 10.2% kind of a growth that we've witnessed in the corresponding quarter. So what has led to good set of numbers from the company? Well, the cost optimization measures and the fixed overhead costs, which have not risen as much as the company, along with the higher revenue, has led to a good operational performance. Other expenses as a percent to your net sales, that have lowered to 12% from 14% earlier. Also, we have seen a sharp decline in the finance costs, which in turn, along with your higher operational performance, has aided the bottom line performance of the company. In terms of FY18 numbers, it's a good show for the company, a 30% jump there itself on the revenue front. Net profit, we're looking at an uptick of nearly 70% and on EBITDA, it's been a 47% rise. But however, margins remain stable for this company even on the yearly basis.
Well, amongst the stocks that we're tracking are a couple of earnings which were reported post-market hours, starting off with SKF India. Strong set of numbers coming in, a revenue growth of 8%, but a net profit growth of a much higher 24%, and that was helped by operational performance because EBITDA grew by a strong 34% along with expansion in EBITDA margins to the tune of 300 basis points. That apart, we're also tracking Syntex Industries. Now, while revenue dipped by 7%, the net profit still came in at at about 15%. So that's the kind of growth we saw despite a dip in revenues. And that's on account of a strong operational performance because EBITDA margins expanded by about 350 basis points. On the other hand, we had a weak set of numbers coming in from ABB India, where revenues rose by 17% and the net profit by 14%. But both these numbers are slightly below the Bloomberg consensus estimate, and EBITDA margins also were unchanged and 7.5% again below estimate. So that's the reason we're calling it weak. You have Sun Pharma Advanced Research. Revenues, strong dip of 52%. Net profit was reported at 2.5 crores versus a net loss of 32 crores. But that was mainly on account of an exceptional gain of 49 crores during the quarter. Otherwise, you would have seen a net loss. That apart, we're also seeing a couple of reactions, could see a couple of reactions on the back of bulk deals. One is Enkai Wheels. This is an auto ancillary company. Now, Blue Lotus Capital Multi-Bagger Fund bought 0.6% stake in the company yesterday. So we might see some reaction there. The other one that we're tracking is Everready Industries, an interesting one because Amansa Holdings has sold 1.3% stake in the company. The stock already ended 5% yesterday, but let's see if we can see further reaction on this one. PNB Housing Finance, Carlyle Arm has sold 4.8% stake. We knew this. They had put up this block for sale yesterday. What is interesting is the name of the buyer, and that is General Atlantic Singapore, which bought 1% stake. Their existing investors and already held about 8.5% stake previously. So they have upped their stake in PNB Housing Finance, even as Carlyle has pared some of their gains. On the other hand, Sri Renuka Sugars, the promoter, Khandipar Investments, sold 2.3% stake. So that's another stock that you need to watch out for.
So SRC's Committee of Creditors has issued directions to both ArcelorMittal as well as New Metal to clear all of their dues within the next 7 days and become eligible to bid for SR Steel. Now, this came after a 24-hour voting cycle which started on Monday, and by Tuesday evening these directions were issued. In New Metal's case, they are promoters for one of these shareholders in New Metal is Aurora Trust, wherein Revant Ruya is the ultimate beneficiary, and Revant Ruya's father Ravi Ruya is one of the co-founders of the SR group of companies. So the lenders have asked them to clear off any dues that Ravi Ruya might have against banks and produce a no dues certificate. Similarly, for ArcelorMittal, since they are promoters of KSS Petron as well as Uttam Galva, they've also been asked to clear all of those dues and produce no dues certificate. Only after those no dues certificate are submitted to the lenders within the next 7 days will they be eligible to bid for SR Steel. New Metal had also offered to buy out Ruya's stake and become eligible. However, that option seems to have been not on the table. Lenders are saying that for any change in shareholding of one of the bidders, you will need the permission of the resolution professional as well as the committee of creditors, and only after that can you change the structure of a bidder. So unless those things come, we of course don't know what the bidders are planning to do. They have the option of actually going to court and challenging these directions, but that will become clearer over the next couple of days. On the 17th of May, anyway, the National Company Law Appellate Tribunal is going to hear some of these, some requests from some pleas from New Metal as well as ArcelorMittal, where they are challenging each other's eligibility, and whatever gets decided at the NCLAT then will have some bearing on the way lenders are going to proceed with the SR Steel insolvency process.
We are expecting a healthy quarter for Eicher Motors. So on a consolidated basis, we are expecting revenues to grow by nearly 33%. Revenue seen at little over 2,500 crores. As far as EBITDA is concerned, we are expecting a 37% growth. Also, a similar growth could be seen for the profits, which are expected to be close to 630 crores on a consolidated basis. Also, we are looking at some margin expansion. So 80 to 100 basis points margin expansion is expected for Eicher Motors. The consolidated entity is expected to see the margins at a level of 31.8%. Of course, this time we had a good growth, 27% kind of a growth for the Royal Enfield end of the business, and higher volumes as well as better realizations in that segment will aid the overall performance for Eicher Motors. Also, if you look at the realizations, we are anticipating that the realizations could grow anywhere between 3 to 4% for the consolidated entity. Also, if you look at the margin trend, clearly they have remained about the 31%. So clearly that is one point we will be focusing on. Apart from that, we'll be also watching out for the management commentary on the new launches, how really is the Royal Enfield business doing in terms of the waiting period and demand, and also how do they see the commercial vehicle segment growing moving forward.
Well, the IPO of Mumbai headquartered Indostar Capital Finance opens today and closes on Friday they've set a price band of about 570 to 572 per share. The offer size at the upper price band is 1,844 crores, which implies a post-issue market capitalization of nearly 5,200 crores. Now, out of this 1,844 crores, 700 crores is going to be a fresh issue, which the company will eventually use to expand its capital base and to be able to grow its business. 1,144 crores is an offer for sale. A large portion of it is going to come from the promoter entity, which is called Indostar Capital. So post this offer for sale, the promoter shareholding will fall from 91% to nearly 59%. And then there are some other shareholders which are looking to offer their shares in the offer for sale as well. Now it's a Mumbai-based NBFC, a recently started company. They started operations only in 2011 and they're backed by Everstone Group. So that's about the company. If you look at the business profile, they started with corporate lending in 2011. So that is a huge chunk of their portfolio at about 76%. Another 22% or 23% of the portfolio is SME financing, because that business was started in 2015. And in September and October 2017, they have recently made their foray into home and vehicle finance. And hence, that's currently a small chunk of the portfolio. But that is the part of the portfolio that the company is looking to expand, so moving towards retailization, but currently largely a corporate and a SME lender. If you look at the financial picture, between FY13 to FY17, that period, at a CAGR, the credit exposure has grown by 30%, net interest income by 28%, and net profit by 24%. So solid growth numbers as far as that 4-5 year period is concerned. The gross NPA over the years has been steadily inching up to 1.7%, but that still is a manageable number. Net interest margins are about 6.9% strong numbers as far as the NIM is concerned. If you look at the return ratio, that's a little disappointing, because they seem slightly inferior. Return on equity at about 10.9%. Also remember that they have a capital adequacy ratio of about 31%, which along with this ratio sort of tells you that the balance sheet has been underutilized and that the management has been cautious with respect to lending. So return ratios seem relatively weaker. Now, if you look at it on a valuation and peer comparison basis, at the upper price band, the asking valuation for Indostar is about 1.9 times its book value. You have SME lenders like Capital First, Shriram City Union Finance and Mass Financial, which trade at much higher ratios. Even corporate lenders like Piramal Enterprises, which have a retail focused portfolio, are actually trading at much higher valuations. Having said that, these are not strictly comparable because the portfolio profile for all of these are largely different. But analysts do believe that at 1.9 times the valuation seems reasonable, but there's a mixed verdict coming in with respect to recommendations. You have Aditya Capital, Angel Broking, IIFL and Hem Securities, all of which have recommended to subscribe to the issue. And on the other hand, you have names like Antique Broking, ICICI Direct and Choice, which have actually recommended to avoid the issue. The reason being that while you have some analysts who believe that there is a well-capitalized balance sheet and growth potential because of them trying to expand their home and vehicle finance portfolio, others believe that it's better to wait and watch for how this retailization strategy plays out.
All right, there's lots to talk about today with regard to geopolitical issues affecting the crude prices globally and also markets both in the US and in Asia, particularly ours. We'll see how that pans out, and you find out on Bloomberg Quint Live. There are also several stories on the website that you'll find. Here are just a couple of them. The government continues to distance itself from the controversy surrounding loans that were given by ICICI Bank to Videocon Group and allegations of nepotism against the bank's chief executive officer Chanda Kochar. Lok Ranjan, who is the government's nominee on the board of ICICI Bank, skipped the lenders' board meet for the second consecutive day on Tuesday. And Finance Minister Arun Jaitley has accused the Congress of fishing in troubled waters and adopting a fringe position over the issue of impeachment of the Chief Justice of India, which he said will immediately hurt the party in the Karnataka elections. All right, that's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.